Hello everyone and welcome back to the channel. My name is Brent and in today's video we're going to go ahead and cover the M1 Finance 1 week performance for the 2nd to the 6th of August 2021. We're going to go ahead and kick it off by taking a look at stock futures going into Monday. Again, it does look like it's going to be a bit red in the morning, but that can quickly change throughout the day. During our M1 Finance area, we're going to go ahead and cover the overall performance of our portfolio. Check out the 1 week performance in comparison to the three main indexes. We'll take a look at what dividends were paid out last week, how much we're going to be investing this week, what stocks we sold out of recently because we did liquidate some of our portfolio and reinvested it elsewhere. And then we're going to go ahead and cover how much our current portfolio is paying out in dividends with the recent update. So we're going to go ahead and cover all of that in today's video. If you guys have any comments or questions at any time, go ahead and drop them down in the comment section below. But otherwise, if you are brand new here to the channel, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue, and let's go ahead and get into the video. So starting off by taking a look at stock futures, this is going into Monday. Right now, this is data as of 2:15 a.m. Eastern time. As we refresh this, we can see here that it's still kind of sitting there at that down about 0.25% there for the S&P, Dow Jones, and the Nasdaq across the board. So in the morning, the markets may appear red opening up, but that can quickly change throughout the rest of the day. So that's just a really good opportunity to continue to buy. I'm really hoping that the market pulls back. I've been wanting a bit of a pullback, but we'll see if that takes place here with the remaining weeks in August. Now let's go ahead and jump over into the M1 Finance portfolio. So what we're looking at now is our dashboard here on the M1 Finance portfolio. This portfolio has been active as of January 8th, 2018, so a little over 3.5 years. And this is a Roth IRA, so it does have a cap of how much we can contribute every single year. Currently, it has a cap of $6,000. So over the past 3.5 years, we've been able to build this portfolio to a nice sizable amount. Now, our current performance here, overall, we're up 72.71. Now, this is money weighted return. So based on our current investment and how much it has gained in market gains and dividends, that's all calculated there for us. Now, looking at our greatest winners here, let's go ahead and sort this overall. Apple's number 1, Main Street Capital, number 2, Lowe's is number 3. As we scroll down here towards the bottom, we have a couple underperformers. We have Clorox, which got hammered last week. They were down some 10% on the week. Now this is showing as down 51.47%, but that is incorrect. We initially invested roughly $2,000 into this position. So if it was down 51%, it would be down below $1,000 here for Clorox, but this is basically 5xing our losses on as far as how it's showing, but it's incorrect. Hormel Foods is the number 2 and Colgate is in our number 3. Simon Property Group has been picking it up here. It is now down roughly 6.26%. So this is one that I do plan on liquidating from my portfolio. That it is down 6.26%. You know, it's fairly close. I could essentially sell out of it and just be done and move the equity into other positions that I believe will do better here in the short term. But for the meantime, I'm going to go ahead and keep it. They reestablished their dividend and we may continue to get some appreciation from that one and then we can remove it later on. So those are, oh, and we have Merck here down 4.47%. So those are our negative positions within the portfolio. Now let's take a look at the 1 week performance. This is, essentially where we were flat. Last week, we did our 1 week performance. We were up some 2.5% on the week, where the rest of the market had been essentially flat. This week, we are flat at up 0.01%, whereas the rest of the market, the S&P 500 is up 0.94%. The Dow Jones is up 0.78% and the Nasdaq is up 1.18%. So why are we essentially flat? That is because if we go by our biggest winners and losers and we scroll down here towards our losers, we have quite a few losers, but we have 2 positions here that took a hit of over 10% last week. So number one, Cardinal Health down a whopping 14.13%, followed right behind by Clorox down 10.12%. So those two positions right there lost over $300 alone, and the other positions that were down, they don't add up to as much as those positions being down as much as they had. So they definitely helped lower the overall performance. We see Simon Property Group here up 6.86, IIPR up 6.26. These are both real estate investment trusts. We have Pfizer up 5.28. So we had some pretty good positive winners there, but just not enough to overtake the losses from those other positions. But with time, they'll gradually recover as well. So that is our overall performance and our 1 week performance. Diving over into the activity now. Now, last week, in the week prior, we did end up selling out of one company from our portfolio. We sold out of Altria. So we sold out of $951.07. It had been in our portfolio for roughly 3.5 years since its initial creation, and it's done essentially nothing, trended sideways. We had lost market gain, but we recovered it with dividends. So essentially, we just kind of traded it off. And now last week, we did make two buys. We kind of split it 50-50 here. I couldn't make the final decision. Colgate, $106.35. And Hormel Foods down $106.36. And over the past 1 week, we saw that both of these positions, both Colgate and Hormel Foods, had actually underperformed. So if we look at, again, the 1 week here, and we look for Hormel Foods, it's down 1.96, and Colgate is down 0.96. So both of our positions that we had bought last week had actually gone a little bit lower throughout the week. So again, this could be another good opportunity to buy a little bit more of each of these companies, but we'll take a look at which ones are coming up on ex-dividend and if there is some better opportunity. As far as dividends that were paid out last week, last week we had the 2nd to the 6th of August, and we received 3 dividends. We received $3.32 from ABM Industries, $5.98 from JP Morgan, and up at the top, we received $3.04 from Lowe's. So right there, altogether, we made a whopping $12.34. So not our biggest dividend week, but definitely a nice sizable amount. So that kind of added to our maximum amount here that we're going to be able to invest, which is $213.76 this week. What I want to go ahead and showcase to you guys is our current portfolio, or our current income from this portfolio. So what I'm using for this is a free website called trackyourdividends.com. I entered all my portfolios in here. I recently went through here and updated all my positions, all my holdings. So this portfolio here is roughly estimated at $36,622. So that is fairly accurate. Now this doesn't go, what is it, a thousandth or 10,000ths of a share. This only goes into the tenths of a share right here. So it's not going to be as accurate as what M1 Finance has given you, because it only goes in 2 decimals there for the fractional shares, but it is close enough to kind of showcase here. So our current dividend yield of our portfolio is, if you were to buy them all, the same shares that we hold right now, you would have a roughly starting yield of 2.81%. But our yield on cost, based off where we bought many of these positions, how long we have held them in our portfolio, that kind of takes into account our average cost and the current dividend yield, and it gives us a yield on cost of 3.51%. Our annual income, even with the sale of Altria, Altria was a big beast. It was roughly a 6 or 7% yield. That did take us down, $60 or so in a year from dividends. But by reinvesting it elsewhere and continuously adding more capital into our portfolio, our annual income for this portfolio still remains over $1,000. It is sitting there at $1,028, with our portfolio beta sitting at 0.78. So the portfolio beta is a measure of the overall systematic risk of a portfolio of investments compared to the markets as a whole. So if equals the weighted average of the beta coefficient of all the individual stocks in the portfolio. So our portfolio overall is at a beta of 0.68. So I think that's less volatile versus the main index of the S&P 500. And that's because it is mainly filled with a ton of, all it has in it is dividend companies. So here we can expect here in the month of August, one of our least paying months here, roughly $55 from dividends. So the majority of our dividends within the M1 Finance portfolio do not come in the month of August. In September, we're roughly getting 92, but as we continue to buy up more shares, maybe our September 1 will adjust, and then our October is up over currently about $110. So definitely nice to see there across the board. This allows you to see upcoming dividends as well, but it's not as detailed as, when it's going ex-dividend. This is just when are you due to get paid out. So here we can kind of see the breakdown of what companies are paying out this month. Apple, AbbVie, ABM Industries, Colgate, Clorox, Hormel Foods, Lowe's, Main Street Capital, and Realty Income. But if we're interested in finding out what companies are going ex-dividend, that is where I like to head over to Seeking Alpha. Inside of Seeking Alpha, you punch in your portfolio, all your holdings here, and you head over to the Dividends tab. Within the Dividends tab, you are now able to see what positions are coming up on ex-dividend, and you can sort this by the ex-dividend date. So today, on Monday, as we are releasing this video, that is the 9th. So Apple went ex-dividend on Friday. Siggy is going ex-dividend on the 12th, which is this Thursday, meaning that we would need to buy and hold, or average into Siggy or Walmart before Thursday. And Southern Company goes ex-dividend on the 13th. So we would want to buy that on Thursday or prior. We don't want to buy it on the ex-dividend date because we wouldn't be able to, get the dividend for it. So based off what is coming up on ex-dividend, we really do not have a lot of positions that are currently negative overall. So if we go ahead and take a look here again, down towards the bottom, Merck, Simon Property Group, Colgate, Hormel, and Clorox. Right now, I feel pretty comfortable with where Clorox is at. I don't want to average any more into this one at the moment. Even with that recent 10% loss there and such, I don't want to be buying any more of that one at the moment. I have these other positions that I kind of want to focus a little bit more on. So one being Colgate, continuously kind of added into it, and Hormel Foods and Merck. Now, looking over here, we can see that neither of them come up on ex-dividend here in August. But in September, we can see that Merck begins to go ex-dividend on the 14th. There was also another one here. Simon Property Group there goes ex-dividend on the 8th. Cardinal Health, which took that recent 12% dip, goes ex-dividend at the end of September. So, if I was to just look at that and I was looking for some losses to average into, I could buy up some Merck right now. Merck was down recently. It's been getting kind of beat up here in the short term. Over the long term here, these provide some really nice stats. If we take a look at the current yield trailing 12 months, it's at 3.28. Its yield forward is at 3.45. Their 4-year average yield is at 2.97. You're getting nearly a 50.5% increase on their average yield. You can see their trailing 12-month dividend rate. Now, as far as their dividend growth rate, check out their growth rate here. Over the past 3 years, they've grown their dividend on average 10.71%. Over the past 5 years, they've grown their dividend on average 7.21%, and they've been raising their dividends for the past 11 years, continuously raising it year after year after year. Simon Property Group here, kind of risky at 0 years. This is kind of another reason I don't want to buy into this one at the moment. They had cut their dividend during the pandemic, and now they are reinstating it, but it's a bit of a risky. You can see here their dividend growth is in the negative now, so a bit risky. I'm just kind of leaving it in the portfolio, not really averaging into it at the moment. And then kind of looking at it like that. So as far as positions that I want to buy into, I do want to buy a bit more Hormel Foods and Merck. I think last week we had picked up some Colgate, so I'm going to take a little bit of a break here on Colgate and kind of bump up these positions here between Merck and Hormel Foods. So right now we have $213.76 there. We divide that by 2, that's $106.88. Come back down here, select Hormel Foods, select buy. Go ahead and punch in my number there and confirm that buy. And go ahead and complete. Head back to my portfolio. I'm going to go ahead and just type in MRK manually, select it, hit buy. Now here we may have a bit more to invest. I'm just going to take the total available there for order and go ahead and continue and confirm. And there we go. We now have 2 pending buys within our portfolio. We can see here on the left hand side, we have 2 upcoming trades available. And we can kind of see a breakdown here once again. Hormel Foods and Merck both for $106.88. So that is what we are going to be buying here on Monday. I had also taken a look at Walmart, Southern Company, and Siggy. Both of these have, all 3 of these have really broken out recently. Walmart especially, Walmart had got beat up here in March timeframe of this year. They were down in the 129s and 120s, and they recently broke. They continue to break higher, but they may have some resistance here at that 147, 148. This little patch right through here. They have to kind of break through this resistance before they kind of hit those highs of 150. So, there's a $5 upside here, but they could retrace as well, just depending on future earnings and such. So I thought that was interesting. I was kind of looking at these 3 right here just because they are coming up on ex-dividend. I already hold them in my portfolio. I would be averaging up. So, but I kind of felt that they were kind of over at the moment. So I just kind of holding off on them at the moment. So that is basically it for this video. Let me know down in the comment section below. Are you currently buying anything? Are you holding? Are you selling out of any positions, taking profits? Let me know down in the comment section below. Otherwise, if you are brand new here to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue. And thank you all for tuning in. Really appreciate it. Drop me a comment and I will see you guys in our next video. Bye-bye.